Welcome to The Explainer. I am absolutely thrilled to guide you through today's topic because honestly, we are looking at a bold, kind of hidden reality playing out right in front of us in the financial world. If you just follow the daily charts, you might easily think crypto is entirely about retail volatility and wild market swings. But beneath all that surface noise, there's a completely different story unfolding. Traditional financial giants, we're talking the true heavy-hitting titans of Wall Street and global payments, are quietly, rapidly, and aggressively building the actual future of crypto infrastructure. To really wrap our heads around this, we have to look at the recent market action. Think about that recent Friday sell-off. It hit the crypto markets like a bad breakup text. It was chaotic, absolutely everyone took damage, and honestly, nobody looked clean coming out of it. But then came Monday's pivot. And that rebound didn't just show recovering prices, it showed us that the institutions are absolutely not leaving. If you really want to understand where this entire space is going, you've kind of got to ignore the momentary price panic and watch where the actual infrastructure is being laid down. Okay, so let's dive into this. We have 3 definitive pillars of this institutional takeover to cover today. First up, Mastercard's move to build a stablecoin empire. Second, Coinbase opening the pre-IPO vault. And third, Wall Street calling Galaxy digital. Starting off with pillar number 1, Mastercard's stablecoin empire. Let's get right into it. Look, this is essentially a massive, high-stakes turf war. For a solid decade now, Tether and Circle have completely owned the stablecoin market. Combined, they control roughly 80% of what is an absolutely massive $325 billion pie. That's a staggering amount of dominance. And Mastercard? Well, they've clearly seen enough. They don't just want to casually participate in this space anymore, they want a significant piece of that pie for themselves. So, what did they actually do? They expanded their stablecoin settlement capabilities across 8 different blockchains, locking in major players like Ethereum, Solana, and Polygon. They're now supporting 6 regulated stablecoins, pulling in Circle's USDC and PayPal's PYUSD. But the real game changer here? They've added intraday settlement windows and weekend processing. This is a huge deal because it gives their partners significantly more control over liquidity timing for cross-border payments. But here is the crazy part. This was literally just their opening act. Behind the scenes, we're seeing a very clear build or buy strategy unfold. Mastercard, Visa, and Stripe are reportedly incredibly close to launching a joint stablecoin platform. They are basically building their own infrastructure play to compete directly with Tether and Circle. And then on the buy side, we are seeing massive, earth-shaking acquisitions. Mastercard already bought BVNK earlier this year, and Stripe, they paid a staggering $1.1 billion for Bridge. These global payment giants are telling us loud and clear that they are completely finished licensing other people's rails. And the broader market reacted immediately to this looming threat. Circle didn't even wait for the fine print to be finalized. Its stock dropped roughly 11% just on the news of this impending competition. And the plot definitely thickens here, because Coinbase is currently evaluating whether to join this new joint platform. That puts their existing and soon expiring revenue-sharing deal with Circle in a very, very complicated spot. Which brings us to the ultimate takeaway for this first pillar. Mastercard, along with heavyweights like Visa and Stripe, isn't just trying to disrupt stablecoins. No way. They are trying to completely own them. They intend to control the entire payment layer of crypto from the ground up. Let's move on and see how this builds into pillar number 2, Coinbase opens the vault. Coinbase is really stepping up to act as a crucial bridge for retail investors by launching pre-IPO perpetual futures contracts. Okay, let's break down this slightly complex financial product without the jargon. Basically, it allows retail traders to get cash-settled price exposure to private companies well before those companies ever touch a public exchange. This is groundbreaking. A product like this literally didn't even exist on a regulated U.S. crypto exchange until this week. Just compare the old way to the Coinbase way for a second. Historically, the retail demand for high-profile private companies, think SpaceX or Stripe, has been completely off the charts, but you couldn't get in. That access was firmly gated behind elite venture funds and steep $100,000 plus minimums. Coinbase has completely changed the game here. They're positioning themselves as the ultimate bridge. Because these are cash-settled contracts, no actual equity is changing hands, but regular everyday traders finally get the price exposure they crave, and Coinbase gets all that sweet trading volume. It's an absolute win-win for their platform. We can actually see the broader market digesting this aggressive strategy right in Coinbase's recent price action. They hit a 52-week high of $444.65, which was followed by that hard drop during the Friday pullback we talked about earlier. But look at the Monday recovery, bouncing partially back toward $162. That recovery strongly suggests that the market fundamentally believes in Coinbase's product roadmap, even while Bitcoin itself is out there having a bit of an identity crisis. Now, what's incredibly interesting here is that the big players are watching these dips like hawks. ARK Invest's Cathie Wood stepped right in and bought over 13,000 shares of Coinbase during that exact pullback. Make of that what you will, but it shows some serious, undeniable institutional confidence. So, the core takeaway for Coinbase is this. They are no longer just a place to buy and sell Bitcoin. Founded way back in 2012, they are methodically and brilliantly expanding from a basic crypto exchange into a full-stack financial platform. They're offering crypto, stablecoins, and now pre-IPO futures all completely under one roof. And that brings us to pillar number 3, Wall Street calls Galaxy. Guys, this is the ultimate validation that traditional wealth management wants in right now. Galaxy Digital saw a massive 21.7% single-day bounce on Monday. That was one of the sharpest single-day moves in the entire crypto infrastructure space. And to jump this incredibly huge, for sure, that requires a lot more heavy lifting than just pure broad market sentiment. The primary catalyst was the Morgan Stanley deal. Galaxy announced a very specific referral arrangement with Morgan Stanley Wealth Management. This deal actively facilitates the in-kind creation of spot crypto ETP shares, which lowers transaction minimums and radically streamlines access for Morgan Stanley's wealth clients. Galaxy, led by Mike Novogratz, has spent years quietly building this institutional-grade infrastructure. This partnership practically proves that the largest wealth management firms on the planet are officially moving from being crypto-curious to being fully crypto-operational. And there is a truly fascinating mirror image build-out happening in the market right now. Galaxy just launched an institutional OTC prediction markets trading desk, seamlessly adding event-driven derivatives to their toolkit. At the exact same time, Robinhood is building the exact same product, but for retail investors. It's just incredible to watch. This prediction market build-out is happening simultaneously, reaching from the absolute opposite ends of the market to meet right in the middle. So the crucial point we have to understand is that Galaxy isn't just surviving the volatility that normally shakes out the weaker players. They are actively becoming the official institutional crypto infrastructure layer that Wall Street actually wants to use. And Morgan Stanley just proved it by putting them on speed dial. Bringing this all together, our initial thesis is proven out. The institutions are fully in the building. Mastercard is aggressively building its own stablecoin empire to bypass the current duopoly. Coinbase is transforming into a full-stack powerhouse by opening the pre-IPO vault to everyday retail traders. And Galaxy Digital has positioned itself perfectly to become Morgan Stanley's undisputed go-to partner for actual operational crypto access. We've seen the evidence laid out today. The traditional financial giants are no longer just sitting on the sidelines watching. They are the ones laying down the tracks. So it really begs the question, if the suits are the ones building the rails, who really owns the future of crypto? I'll leave you to think about that. Thank you so much for learning with me today, and keep exploring.